SoFi reported first quarter 2025 earnings last week, and we've had a few days to digest exactly what happened. One of the things I think is interesting is the stock is down about 9% since that report. I'm recording this late on Monday, but the report was pretty good, and the company is executing on exactly what we wanted to if you are an investor in SoFi. They are taking less risk in their lending business because more of that risk is being offloaded via their loan platform. And you have a ton of growth in the financial services business. So let's dig through exactly what they reported and what management said about the results. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go right to the highlights from the quarter. And this is from their earnings presentation. You can see that revenue is up 33% in the quarter. That's exactly what you want to see. A lot of that is going to be driven by financial services, but I'll get to some of those details. Net income was also $71 million, and adjusted earnings per share was 6 cents. Fee-based revenue. This is going to be really the big thing that I think investors should be watching over the next couple of years is, does this continue to grow at a really rapid rate? One of the things that SoFi is trying to do is get away from being a traditional bank where you're making loans on your own balance sheet to being much more of a platform where you have customers on your platform, but if they want a loan, you'll give them a loan that looks like it's coming from SoFi, but actually the risk is being offloaded to another investor. That's what they're doing with their loan platform business. But these fees were up 67% year over year. That's what you want to see because it's low risk revenue and low risk margin, and then also high margin for SoFi. They've been doing this in recent quarters, is combining the tech platform and financial services. So those two together were up 66% year over year in tangible book value. If you are a banking investor, that grew nearly $1 billion to $5.1 billion. So that's a good proxy. If you are a traditional bank investor and you're looking at what is the tangible book value of a company, and that's the proper way to value a banking stock, $5.1 billion, the market value as I'm recording today, $14.2 billion. So SoFi would still be overvalued based on that simple metric. But I think SoFi is becoming much more of a tech platform, and that's where you're going to get a much higher multiple than you would from a traditional bank. And just to go over a bit of an overview, the idea with SoFi is that this is going to be your digital solution for banking services, and they're going to add more and more products. The deeper they build that relationship with you, so you become a member, maybe you get banking services, and then you add a credit card and start investing, and then maybe take out a loan, whether it's a mortgage, personal loan, or student loans. That's kind of the virtuous cycle for SoFi. They call this also the financial services productivity loop. So you can see this is kind of all their major products and services. You can see that potentially you could add all of these if you want to go all in on being a SoFi customer. With the members and products, it's a little bit weird how they report some of these numbers, but the members is just the number of people who have active accounts with them and with one of these different products. Now that's 11 million members right now, and the number of products that they have taken out. So a product could be a loan, but that's now 15.9 million products that are outstanding right now. And like I said, I think this is the most important right here, is the fee-based mix. This goes back all the way back to 2021. Fee-based was just 26% of revenue. Now that's up to 41% of revenue. That starts to get to over 50% of revenue. That's what you want to see. That's how you're going to earn that tech type multiple rather than a banking multiple. Now, financial services is really where a lot of the growth has come in the most recent quarters for SoFi. You can see the dark blue is net interest income, primarily generated through deposits, credit card loans. And then the light blue is non-interest income from fee-based, generated primarily through the loan platform business, referrals, interchange, and brokerage. So actually the loan platform business doesn't end up in the lending segment. This is a little bit strange the way they reported it. It ends up in financial services. So that's where you're going to see some of this growth is going to be attributed to the loan platform business. And the contribution margin from the loan or from the overall financial services business is really astounding, now at 49%. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, the lending segment is doing reasonably well. Didn't have a whole bunch of defaults. I think that's really a testament to SoFi taking relatively low credit risk in the people that they are giving personal loans or student loans to. So as the economy maybe slows down a little bit, At least right now, we don't see a lot of indications that's going to be a huge hit to the balance sheet. So adjusted net revenue, $413 million in the quarter. That was up from $326 million a year ago. But that contribution margin is down just a little bit to 58%. And originations, this is where I think we're starting to see a shift towards what we want to see, which is more home loans for SoFi. You can see that was a huge number in 2021, really pulled back over the last few years. That's not unusual because the housing market has really slowed down. We can see $518 million worth of originations in the first quarter. That's the best quarter. That's the best first quarter that we've seen since 2021. So can that start to be much more of a growth business? That would be a much lower risk business than you get with personal loans or student loans. So I would like to see more mortgages happening on SoFi, but we'll see how that plays out over the rest of the year. The technology platform segment, this is one that continues to be an almost there growth driver for SoFi. Management talks about this seemingly every quarter. We've got a bunch of these deals in the pipelines, or we just signed some deal that's going to start to generate revenue in 2026. So we've heard that with a few of the recent deals that 2026 is going to be sort of an inflection point for the technology platform business. And this is really SoFi providing services on kind of a white label basis if you want to offer some sort of simple financial service. So you want to offer a debit card or a savings account with your business. SoFi will do that through these white label services. This was part of the Galileo acquisition. It's actually brought some technology to the SoFi platform as well. Some of their commercial operations are using the Galileo platform, some of the things they built for other companies. So we'll see if that ends up being a growth driver, but probably not a huge growth driver in 2025. Some of those new projects will kick in 2026. But again, like I said, always seems to be a few quarters away. So the real growth right now is in financial services and the lending business, particularly through the loan platform business, which, like I said, ironically ends up in the financial services business. Those are really the growth drivers for SoFi right now. So when I look at this quarterly report, everything is kind of as you would expect from SoFi. They continue to attract more customers, offer more products. They're taking reasonable risks in their loan business, and they're moving much more to a fee-based business rather than a traditional lending business that you would get with a traditional bank. That's what you want to see. And eventually, I think that earns a higher multiple from the market, but kind of steady as it goes. I don't know if the market's going to react negatively. If we do go into some sort of recession, that could potentially be a buying opportunity. But this is a stock that I'm holding on to long term. So let me know what you think about SoFi's results. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.